And you're on.
Good morning. Happy Saturday. Thank you for taking time out of your busy weekend to join me today. I hope you're enjoying these webinars. We're getting a lot of feedback that people really love them, so I hope that includes you. I think it's just great when you've got something on your mind as you're studying the materials and to be able to get that question answered. And the thing is that a lot of times you have a question and somebody else has the same one. So we've got some good questions today. We're going to talk about what documents you need and all kinds of stuff. Everybody always asks about direct mail, so we're going to talk about that and talk about private investors. We've got a nice variety of questions today. So we're going to go through those and hopefully you'll find them very valuable to you. So first of all, I've got a question from Margarete, and she wants to know, could you discuss what documents are typically available on a seller carryback note? Now, keep in mind, this is different than if you're doing the non-performing. But she wants to know about the seller carrybacks. And she says, from what I've seen on places like FCI Exchange, the documentation isn't nearly as good as you outline in your master guide. Well, that's probably very true. And one of the reasons is you may not realize that some of the documentation that you need, that I have on the list that you need, you're going to actually get yourself. So you have to keep that in mind. You'll do that as part of your due diligence. So you should always expect to get the original note at closing. We don't need it for a quote, obviously. They're going to just scan a copy of it and send it over to you. But as part of my agreement, I always make sure that they have the original note available. There's nothing worse than getting ready to close, and right before then, the note seller calls and says, hey, I can't find the original note. That is a problem, let me tell you. Okay, so you want to have a copy of the note. You would like to have a copy of the mortgage or the deed of trust, but that's not as critical because it's public record. So if they don't have a copy of it, when we pull the title update, we can always request a copy. But it's really nice to have it so that you can look at it before you give your quote, but it's not critical. The other thing that they really should have, and I would say probably 90% of the time they do have, is the settlement statement from the closing. Now, why would we need that? A couple things. First of all, that's the proof that of what their down payment was. You can see right on the settlement statement. So they can't make up that, hey, I put 20% down or something like that, when in fact they didn't, okay? The other thing is, it shows if there is title insurance or not. Keep in mind, if they purchased a lender's title policy, okay, not an owner's policy, if the owner of the house, the payor on the note, if they have an owner's policy, that's not going to help you. You need a lender's policy, okay? And you can identify what is available, what they bought at closing, just by looking at the second page of the closing statement. And then probably most important, it shows what title company they used. Because if there is an existing title, even if there's an owner's policy, if there was any title work done at that time, then we can call that same title company, and that's normally who I would close with. And it will be less expensive for you just to update, even if they didn't buy a policy. The fact that they did the title work initially will save you some money, because what will happen is instead of going back 42 years, they'll just update from whenever that note closed. So that will save time and money. And obviously, if there is an existing policy, then you absolutely do want to go back to that title company. I usually ask for an endorsement. It's not necessary because you're automatically covered, but I like it just so that everybody's on the same page that I own that note now, that it's being assigned to me. Okay, so you want a copy of the note, you want a copy of the mortgage or deed of trust, and you want a copy of the settlement statement. If they have an existing title policy, it's a great idea to get that, okay? But a lot of times that comes in after the fact. But if it's available, we'd like to have it. And you absolutely need to have proof of pay history. most of the time nowadays, people are sending me their bank statements and they're just showing that the deposits have been made on time. Now, if you get checks in the mail and you're lackadaisical about making the deposits, that's not going to work so well for you. And that does happen, okay? But a lot of the notes are automatically deposited, and you can see very clearly that they come in every month. Now, what can be a problem is if they have multiple mortgages and they're all $500 a month or something like that, then you don't know for sure whether it's the note that you're buying or not. But most of the time, you are able to discern by the bank statements when those payments were made, particularly if they were done by ACH deposits. Otherwise, as a note holder, if people are mailing me checks, I always make a copy of the check. So I have that in my file, and I do something a lot of people don't do. I save the envelope because it has a postmark on it. So it shows clearly when I received that payment. But most people don't do that. So don't expect that from other people. Okay. But the point is, you have to have proof that they've made on time. So, Margarete, those are the things that you should absolutely expect to get on a seller carryback note. Now, the other things that we talk about are things that you're going to do as part of your due diligence. For example, I mentioned that we want a mortgagee and a mortgagor estoppel. Okay, what those are, don't let that word scare you. Think of it like this. It's an affidavit that says, stopping today, as of today, this is how much money is owed. And it will say, I've made this many payments, I'm not in default, there are no offsets, there's no building orders, no issues, I didn't make any side deals. To my knowledge, the note has not been sold to anybody else. And it's just an all-around good affidavit that you want both the payor and the note holder to sign their own affidavit. That way, if 5 years from now, the note is ready to pay off and the payor says, wait a minute, a note seller promised me that if I made every payment on time, he'd give me a $5,000 credit at the end. You can pull out that affidavit and say, wait a minute, you said in this affidavit there were no side agreements. So it's for everybody's protection that you get those affidavits. And you can prepare those yourself and have those signed prior to closing. I don't recall ever having that as part of the package. It's always something that I prepare. You may want to get a credit report on the payor. Now, that's a little bit tricky. I used to belong to the credit bureau, but once I moved back and have a home office and work out of my home, I can't belong to the credit bureau because they want you to have a separate facility. They actually will come out and kick the bricks and make sure that you've got file cabinets locked up and all that kind of stuff. And so I don't belong to the credit bureau anymore. However, a lot of times the people's credit is immaterial. If there's a very low loan to value, excellent pay history, I really don't care what their credit is. But if I do want their credit, it's real simple. When I call the payor and explain that I'm buying the note, and at that time, that's the same time I'm going to ask them to sign the affidavit, and I tell them it's for your protection as well as ours. At that time, I'll say, I'm going to need to pull your credit. But if I run it, it's going to lower your credit score by 4 points. And I don't want to do that. So if you would not mind going to creditkarma.com or Free Credit Report or one of those and just pull your own credit and make sure you get one that has the credit scores. And then if you will email that to me, that way I don't have to pull your credit and it won't harm your score. So that's how I get around that. And you will get the updated title report. Even if you're not going to get title insurance, you always want to see where you're at today. Even if you're already insured under an existing title policy, I still get a title update because I want to know if anything else is going on. Are there any judgments or anything like that that maybe from the borrower that have attached to the property, that kind of thing. So I always check that. The other thing you want to get is an appraisal or a BPO, a broker's price opinion. And you can order that yourself. And so that'll be part of your due diligence package. So All of those things together make up a complete documentation package. But again, just to recap, the things that you absolutely need from the note seller is the original note at closing. Okay, you need a copy of the note to give a quote. You need hopefully a copy of the mortgage or deed of trust, or you can get them from public record. And you need the settlement statement and pay history. Those are the things that you absolutely need from them. And then you can just go through the materials. You can download the affidavits from your forms library online, and you'll be set to go. One thought that I have, if you have not used Pro Title USA, they are really good. They're quite fast. And I mean, a lot of times I can get a report back like in 4 hours. And they're less than $100 for a current owner search. And it will immediately let us know what's on title. Matthew, I think that you're coming through on my phone a little bit. So you might. Oh, my bad, on me. Thank you. Appreciate it. Okay. That was a great question, Margarete. Thanks for sending that in. And so now I have questions from Laurien and John, and I hope I pronounced that right, Laurien. They both pertain to the direct mail, and they want to know what are the best ways to find private note holders that you can send direct mail to. The easiest way is to buy a list. Many of you know my story about many years ago. Before they had list providers, I actually went downtown to the recorder's office, spent the entire day down there going through the mortgagee index list, and came home with 6 names and was ready to throw in the towel. I mean, it's like, how am I going to get my mom to come and babysit all day long, so that I can come up with enough leads to do something? And I was ready to quit. And then I thought, I worked really hard for these 6 leads. And so I went ahead and sent out my direct mail letters. And my first deal came from one of those 6 letters. So it was very awesome, but nonetheless, there was no way I was going to keep going down to the courthouse. Now, I will tell you this, that many counties are now online, and I have a lot of students who are going to the counties and they're just pulling them, working from their home, not going down to the courthouse. And the technical name of what you're looking for is the mortgagee index. Okay. Different counties might call them different things, but that's what it was at Hamilton County where I went. So if you are able to go online and pull that up, then all you want to do is just scan through them, and you are looking for note holders who are like mom and pops, or who possibly have like a small investment company, that kind of thing. But you avoid all of the banks and credit unions and stuff like that. So that is a great way to come up with your own names. And that's not going to be a list that somebody else has. Now, granted, it's public record, so their name could be on somebody else's list. But what I'm saying is it's not a list that has been passed out to everyone where you're mailing to the exact same list that somebody else is getting. So that is kind of a nice thing to have. But I will tell you that most people simply buy a list. As a student of mine, I have several different list providers who I've made arrangements with for my students that they will give you a discount. If you are a student, go to your welcome email, okay? And I've got the names of those providers on the welcome email. I can't give them out publicly. This is going to be put on YouTube because that's not fair to the vendors that everybody's going to get this discount because I posted a YouTube video. Also, I think it's only fair for my students to have that as opposed to the general public. But if you're in doubt or you're not yet a student, I said yet because you need to be a student, but just Google seller finance list or note buyer list or something along those lines. There are lots of different list providers out there. Okay. And some of them you can tailor make a list to what you want. You can give the exact demographics that you want. And in that way, you're not getting the same list that everybody else is getting. You're getting a nice variety. And by the way, I kind of like a variety. I think you have a better success rate if rather than nail it down to just Like, I want all notes with no down payments because I'm going to do partials. I don't think that's a good idea to do. You want a variety. I think that we've gone over now several times what to look for with your list, but real quick, I'll give you the main things. I would look for notes that have a $50,000 balance or more. And maybe I should say original principal amount because they don't necessarily know the balance. And you want the properties to be worth at least $75,000 or more. You want to avoid any bad areas. You don't want the drug areas or the gang war areas, that kind of stuff. But the thing is that there are rural properties, and shoot, we even have some properties right here that might only be worth 40,000 or so. You can still do notes on those. The problem is, I just had somebody send one over to me just yesterday, and the note was only $30,000. And unfortunately, we just could not build enough in for a spread for us to flip the note. Now, that would have been a perfect note to hold. If my student had wanted to buy that note and hold it, that would have been perfect. But there just wasn't enough room in it for us to make it worth our while to flip it to somebody else. Okay, so I hope that helps you as far as your list providers. I will give you a quick heads up. I am talking to someone, and I hope to have my own list source very soon. So be watching for that. Hopefully that'll be coming up in the next couple months. I'm hoping to have it by the time of the academy, but I'm not sure that it's going to be already then. Okay. But for now, just Google mortgage or seller finance list is a good way to Google. Okay. Moving on. Elise wants to know, as a newbie note investor, should I stick with first only for a while in order to avoid potential last-minute bankruptcy filings? Well, Elise, there are two issues here. First of all, whether to do firsts or seconds. I have done a number of seconds, and right after the downturn, seconds were really, really hot. And I know that there are institutional buyers that are still buying seconds and they're really hot, okay? But I'm talking about my students, most of whom are individuals. They're just going to buy a couple notes at a time. And in my humble opinion, I would not focus on seconds right now. Yes, you may find some really good second, non-performing seconds that you could buy. But overall, unless you're going direct to the source and you're getting these direct from a bank, most of the time, if you're looking at a spreadsheet and you're going to do like cherry pick and that kind of thing, by the time they get to you, the good ones are all taken. And usually the seconds that are left, you're not going to make any money on. I mean, they're ones that nobody wants. There's no equity in the property, and there's no, like, you'd have to, it's just not worth the trouble. I'll tell you one thing that happened. I was at a note convention, and I was talking to one of the resellers of both first and seconds. And as I was standing there talking to him, this woman came up and she talked about buying seconds from him. And I think she said, I'm going from memory, she's going to pay something like 60 cents on the dollar. It was an outrageous amount. And she left, and I said to him, I said, you're getting 60 cents on the dollar for defaulted seconds? And he said, yes, isn't it great? And guess what? If she wouldn't buy them, somebody else would. Needless to say, I don't do business with that man anymore. He knew that they were overpriced, and he just knew that seconds are really sexy right now and everybody wants them. And it's just like, think about new people that go down to the courthouse and they overbid on at the foreclosure auction. Same thing is happening with the seconds. So unless you're direct to the bank and you know how to properly evaluate a second, I wouldn't be buying seconds right now. And just to reiterate, I'm not saying that you can't get a good deal on seconds. I'm just saying you need to be cautious, okay? And you need to know what you're doing. Now, the second issue was about bankruptcy, okay? I will tell you this. I mean, I've done hundreds of non-performing notes. And whenever we had a bankruptcy, usually it is not a showstopper. Typically what happens is When the bankruptcy is filed, I would contact the bankruptcy trustee. Normally, there is no equity in the property. So most of the time, when you show this to the bankruptcy trustee, you ask for what's called a relief of stay. That means let this note, let it out of the bankruptcy so we can go ahead and foreclose and do what we need to do to protect our asset. And normally they will do that when they see that there's nothing in it for them. Their job is to look through all the assets, try to get whatever money is available, and then spread it out over all the creditors. Well, what you need to realize is you have a first mortgage or first deed of trust on this property. You are a secured creditor. That means nobody can take your position. Okay, so the bankruptcy trustee can't just say, hey, that's a $300,000 house. I'm going to take that and divvy that out to everybody else. No way. That's not going to happen. All they can have is the equity over and above the amount of your mortgage. So most of the time it's irrelevant. There were a number of occasions, a few occasions, I would say, that where we had to pay the bankruptcy a couple $1,000s or $5,000 or something like that, just to give them something so that they would release the equity that was, that they were hoping to get their hands on. So most of the time, if they do file bankruptcy, it's usually like a 6 to 8 week delay and it's no big deal. That being said, I'm going to be totally upfront with you because that's the way I am. You may run into people who I think they're professionals at getting through the foreclosure and just dragging it on as long as they can. And what will happen is first the wife will file, then the husband will file, and then they come back and the wife files a Chapter 7, then the husband comes back and files a Chapter 7, and they could wind up dragging it on for several years. But quite honestly, that rarely happens. It really does not happen that often. So most of the time, you're going to request a relief of stay, and the trustee is just going to release it, and you're derailed maybe 6 to 8 weeks. And so it's typically not a big deal. I hope that answered your question, Elise. And then Elise also asked, do you have any other tips for note buyers who have analysis paralysis? We all have that at times, don't we? Well, first of all, if you have my Easy as 1, 2, 3 coaching, use it. That's what it's there for. I'm a firm believer that coaching is so important. As you know, I had an attorney who taught me this business, and if it were not for him, I wouldn't be here today. I think it's important when you are just starting out to have somebody to kind of look over your shoulder, say, yeah, that's a great deal. No, don't do it that way. But if you have the coaching program, you've got way better than that, because I am going to walk you through the entire deal. Okay. And so basically all you need to do is start your marketing, and that's all laid out in the master guide for you. So do your marketing, find your lead, fill out the submission form, and send it to me. Now, I do have to tell you this. I've kind of backed off of offering the coaching program for the simple reason that I'm only one person and there's only so many hours in a day. So I'm in the process of revamping my coaching so that I will be able to help more people. So if you don't have a coaching program, keep an eye out. I will probably unveil this at the academy that's upcoming, and then I'll also make it available to everybody else as well. But if you do still have time left on your coaching, by all means, that's the way to get around analysis paralysis. That's what it's there for. And if you don't have coaching, it's no big deal. Just follow the checklist. When I started out, I didn't have a checklist. I didn't have any systems. I developed all of those. And so now you have the benefit of that. That's why I put the system together so that you can go through and everything's all organized. It's all spelled out for you. So just do it, okay? You're not going to close anything if you don't get started. And here's something else that I told myself many years ago. What are you afraid of? Are you afraid that you won't know what to say when the note seller calls you up? You know what? That's one person. Even if you totally blow it, you know what I'd look at that as? A learning experience. I mean, they don't know who you are. You're never going to see them again. So if you make a mistake, no big deal. Next, go on to the next one. And now you've learned, what you need to do. But here's the thing that I found out. When a note seller is talking to you, you know the old thing, he who has the cash makes the rules. You're the one with the cash. It might not be your cash, but you're going to flip that note to somebody else who has the cash. So as far as the note seller is concerned, you are king or queen. You have the cash. And if they do ask you something that you're not sure of, you just say, I don't know the answer to that, but I work with a woman who she's got 30 years of experience in this. Let me check with her and I will get back to you. And they will appreciate that response very much. And so that's what I did. Okay, so Eugene has a question. After calculating the mortgage payment on a note, do you have to add in property tax, homeowners insurance, and anything else that would be included in the payment? Eugene, typically that happens on bank loans. The majority of bank loans escrow for taxes, not all of them, but that most of them escrow for taxes and insurance. And that's the PITI. You've got principal, interest, taxes, and insurance, okay? But with seller finance notes, the majority of them do not escrow for taxes and insurance. And quite frankly, that's the way I prefer it. I do not want to deal with escrow. If I'm buying a note that it's built into the note that the people pay PITI, that they are going to pay a lump sum that includes not only the amortized principal and interest amount, but also an allowance for their taxes and insurance. If that's the case, I highly, highly recommend that you use a servicer. It is really worth it to do. It can get really hairy trying to keep track of all the escrow and everything. So personally, I prefer, in the way that I write my own notes, is that I just have the P&I, my principal and interest, and then I ask them to give me proof that they have paid the taxes whenever they're due, and I want proof of insurance in place. Now, that's one of the things that we're going to get prior to closing. And, I probably should have mentioned that when I was talking about the documentation checklist, is the hazard insurance. I don't get that up front when I'm gathering information for the deal, but prior to closing, I'm going to get their declaration page, and I am going to make sure that our name or my investor's name is added on as a mortgagee insured. And so typically, I just want proof that the payments have been made. Now, for taxes, you can always just go to the county website and check yourself. And for the insurance, typically, once you're listed as a mortgagee insured, if they do not pay, you will get a notice of cancellation. But I would not rely on that. So I always make, like, if they're paid up for the next 6 months, I make a tickler to go back and check and make sure that they in fact paid the next premium. Okay. Okay, Eugene also wants to know if I have any thoughts on using virtual assistants to find private mortgages. Well, I do have experience with that. And virtual assistants are great for routine work that anybody could do. If you want them to help you get your direct mail out, that kind of thing, no problem at all. I think that's well worth it, because that's not the highest and best use of your time. Just general administrative duties, great. Definitely take advantage of a virtual assistant. However, I would not recommend that you use them to answer the phone. Well, I need to clarify that. I think it's great to have somebody answer the phone. If you're not available, I think a live person is much better than the call just going to a voicemail, okay? But I had one gentleman who hired a company. It was an entire company. It was not one virtual assistant. But on any given day, there might be one of 3 or 4 different people that would take the call. And the idea was that they were the note seller would call, hey, we just got your letter. I want to know how much you'll give me for your note. And so they had the submission form, and they would start taking the information down on the submission form. Well, the problem is that it was like starting out fresh with every call. There needs ideally, yes, the submission form is relatively easy and most anybody can do it, but there are little nuances that you want to know about. And you get that through experience. And so every time that one of the someone new would come in, they wouldn't know these little nuances. So if I'm going to use a virtual assistant, I would have one person and I would train them exactly what you want on the submission form. And if they're not filling it out correctly, then you can, guide them through it. And then that way they know and you're good to go the next time. So that's my opinion on that. If you have no other choice but to use a general answering service and you get different people, then they're just going to take a message. But if you're actually wanting them to fill out the submission form, I think that needs to be someone that you personally train and that they're the ones that take the information down for you. Okay, Cynthia would like to know, do I need to set up an LLC from the very beginning? And if not, when would be the best time to do it? Well, I always recommend when you're doing business to try to do it under the auspices of an LLC. However, I realize that a lot of people are just starting out and they don't have the funds to start an LLC. In that case, I would just do it in your own name, okay? Close a deal, make some money, and then take part of your profits and set up your LLC. Here's the thing. Typically, what I think is more important than an LLC is to have a self-directed IRA. Because whether you're going to buy to hold or whether you're going to flip notes inside your IRA, you've got the tax benefits of using the IRA, plus you have that shield of the IRA entity. Okay. So yes, it's a good idea to have an LLC as soon as you can, but it's not critical. And actually, many of you know my oldest son, Ben, and he is an attorney, a real estate attorney, and he also does a lot of asset protection, actually. And very soon here, hopefully the next webinar, he's going to be on, and he'll be addressing some of these questions regarding whether to use an LLC, when do you use a trust, should you use an S Corp, that kind of thing. So watch your emails for that, because I hope to have him on very soon here. Okay, Nate has a question, which kind of falls into what I just said. What are some tax strategies that I use and have used in my note business? Well, plain and simple, it's the self-directed IRA. You don't get any better tax advantage than that. And as I said, that'd be the first thing that I do. If I'm going to get into notes, I would get that self-directed IRA set up. You don't want to wait until you find a deal, especially if you're transferring money from a regular IRA into the self-directed. Sometimes that can take, I've seen it take 5 or 6 weeks, because your current IRA holder, a lot of them, they don't want to release the money and they drag their feet. Most of them, it takes 2 or 3 weeks. But nonetheless, I would just make a point to get that IRA set up so that it's available, that if you want to do the deal inside your IRA. And of course, then there's the difference between the Roth IRA and a traditional. If you're starting a new one, absolutely use a Roth. If you have a traditional, then you need to determine for yourself if you should switch that to a Roth IRA. You'd have to pay some taxes on it to switch it over. And actually, Gamma Plan is who I would recommend. And Carl Fisher is going to be at the upcoming Academy. And so he will be there to answer all of your questions about the self-directed IRA, when to use a Roth, when to use the traditional, all that kind of stuff. So hopefully that will help you there. Okay, we just have a question come in from the chat. If your borrower defaults, how do you get the deed in lieu, and how do you protect yourself? Okay, this came in through email. Typically, I will tell you that with the seller finance notes, very rarely do the people default on the notes that I hold. And it's because I've done such a good job vetting them. I'm going to make sure that they have a down payment. I like seasoning. If somebody's made payments on time for 12, 24 months, unless there's some catastrophe, they're not going to go into default. Okay. But let's say that they do. What I have found is most investors, most homeowners do not want a foreclosure on their record. So the key to protecting yourself, Nan, is to take action right away. Time is money. The biggest mistake that I see with people who have notes and they go into default is that they wait too long before they take action. And you have to realize that with every month that goes by, you've just lost that much interest and your rate of return has just gone down. Okay. You're eating up your equity in the property. You're not going to, if you let that go indefinitely, eventually there's not going to be equity to cover that accruing interest. So to protect yourself, what you want to do is make sure that you act quickly. By acting quickly, you contact the homeowner, you see what their situation is, see what you can work out. If they can't, they really don't have the money to stay, then say, look, you know, I really don't want to foreclose on you. I don't want you to have that on your record. Why don't you just give me the deed in lieu of foreclosure? I will not report it to the credit bureau, and you can go ahead and move on. A lot of people will give cash for keys. In other words, say, you know, I know you're down and out. I know you don't even have money to move. Here, I'll give you $1,000 so that you can go ahead and move. Or I'll give you money for your first, your deposit for your, you know, another place to live or whatever. I said something that I want to clarify. And I think I'm kind of getting into too many details here. This is getting to be a long webinar, and I really want to wrap this up. I want to keep it to an hour. So, okay. I said that I would not report it to the credit bureau. But if you record a deed in lieu that says at the top, deed in lieu of foreclosure, the credit bureaus very well may pick that up. And so it may appear on their credit. One of the things that I do with my deed in lieu, I do not title it a deed in lieu. I just say quitclaim deed. Or sometimes I use a warranty deed. If they will give me a warranty deed, I go ahead and use that. But what I do is I put the language inside that deed. And I've also done it by separate agreement, okay, that does not get recorded. But I make it very clear that that deed is being given in lieu of foreclosure, so that when the borrower signs that deed, they have proof that I'm not coming after them in a foreclosure. Okay. But if you use a warranty deed and then you use a separate agreement, that way it won't be reported that they were in default to the credit bureau. So that's honestly the best way to do it to protect your borrower. And so that would be my advice. And if you have analyzed your note, how I teach you, there should be plenty of equity there. And actually, you're probably going to come out ahead by getting the deed, because then you can turn around and resell that if you want. You can keep it for a rental. You can move in. I mean, you can do whatever you want to with it. But let's say you're just interested in getting your cash back. Then all you need to do is sell the property. And if you've got enough equity, like I teach you, if you have an 80% or less loan to value, that means you can sell that at a fire sale for 80 cents on the dollar and still get all your money back. So how you protect yourself is acting quickly and making sure when you buy a note that you have a good, solid, low loan to value. And the lower the loan to value, the more equity that you have and the safer the deal. And again, that's one of the beauties of doing notes, is that you can tailor make an investment that fits your particular level of safety. You know, if you're very cautious, go with a lower loan to value. If you feel good about the deal, then you can go a little higher. Make sense? Okay. Denise wants to know, how do you find buyers to flip a note to if you don't have time to network in person? Well, first of all, use your easy as 1, 2, 3 coaching if you have it, because we're going to use my buyers then. And I have investors all over the country. If you want to be one of my investors, you can go to my website, which is thenotebuyer.com, and fill out an investor profile. That's one of the advantages to being my student, because I always offer my students the first dibs on my deals, whether it's non-performing or performing notes. So certainly, Denise, if you're using the Easy as 1, 2, 3 coaching, you don't have to worry about finding investors, because we will use my investors. But if you don't have the Easy as 1, 2, 3 coaching, no problem. Sell them to an institution. Google note buyers, and you will see some institutions that come up. And so, excuse me, if you sell to them, then you don't have to worry about establishing relationships. And in fact, I will say this: if you are new in the note business, I would not use I would not use private investors for your first deal, because one of the things that my investors rely on me for is that I dot I's and cross T's, that I have completely, thoroughly vetted the transaction. I never sell a deal to them unless it's one that I would personally buy if I were them. And so they're depending on me. Now, I don't sell my notes with recourse, but nonetheless, I have a reputation, and my reputation is everything to me. And so, as a new person in the business, you may not be aware of the different nuances. And so I would make sure that you really know what you're doing before you sell it to a private investor, unless that investor is an experienced note buyer. Then it doesn't matter, because they're going to do their own due diligence and they'll make their own decisions. But for that reason, that's why I recommend, maybe for your first couple of deals, that you either use your Easy as 1, 2, 3 coaching and sell the deal to me, or use an institutional buyer. Once you get a few deals under your belt, then you can start building your own investors and selling direct to your own private investors. And there is a whole chapter on that in the master guide. And that is something that we go into a lot of detail at the Academy. I teach you how to find your investors and how to develop a good rapport with them, how to put a package together that they can't refuse. All of that will be covered in detail at the upcoming Note Buyers Academy. Okay, excuse me 1 second here. Okay. Next question is from George. He says, after I commit to a note I want to flip, so he doesn't have the money to buy it, how much time would I need, or how much time would the note seller typically give me so that I can find a buyer? Okay. Typically, when I give a quote, you need to close within 30 days. That's what they're looking for, okay? However, sometimes there can be glitches. Maybe it's that you don't have a buyer, but it could also be that there was a problem with the title report that you need to get taken care of. Maybe the appraiser, some of the appraisers have taken 3 or 4 weeks just to get out there to look at the house. So on my note purchase agreement, what I've started doing that is very effective is that I tell them that I typically close in 3 weeks. That's common, okay? But I ask them to allow 45 days. So in case there's a glitch with title or appraisal or something like that, that we have time to get that resolved before we close. So George, you want to be able to have an investor that would close within that time frame, okay? Now, I don't tell the note seller, hey, I got to go find an investor, so I might need extra time. I don't want them, they would feel very insecure if they thought that I had to go find an investor. The fact of the matter is that I have so many investors. I have more investors than I have notes. Usually when I get a note, I've got a half a dozen people that are ready to buy that note right away. So once you get in the note business and you close a few deals and people know that you have notes available, if you are networking at your local real estate investors association and meetup groups and things like that, people are going to contact you and want to buy your notes. And so I would recommend you do something like my investor profile form, where you find out what type of notes they're interested in, what geographic area, what kind of returns, how much cash they have available, that kind of thing. And so you have that on standby so that when you get a deal accepted, you've got a number of investors that you can turn to and go, oh, they're looking for a Texas note. Oh, here's a Texas note. I'm going to call Joe because I think this might be perfect for him. So you need to find that balance and build up your investors. You can't promise them anything, but you let them know that you'll be on the lookout, and you try to match them up based on what their parameters are of what they're looking for. And again, just like I said with Denise, you can always use your easiest 1, 2, 3 coaching and sell it to me, and then you don't have to worry because I do have the investors on standby. And if you're not familiar with the easiest 1, 2, 3 coaching, the way that works is that you find the note, you're the liaison with the note seller, I'm the liaison with my investor. I walk you through the entire transaction. I mean, start to finish. And when we close, we split the profits 50-50. So a lot of people, they want to do their first 2 or 3 deals with me. But then once they know, there's no sense in doing deals with me unless you don't have an investor, because most people, there's no sense in giving me half of the deal unless I'm doing all the work. You know what I mean? Okay, I hope that helps. Okay, Ben would like to know, how do you find an investor willing to buy a note without any seasoning? Oh. Ben is talking about a really cool technique that if you have my master guide, you should have received the special report. And the special report is how to buy a property. Okay, you're going to go buy a property with no money down and still give the owner cash at closing, the seller cash at closing. And even walk away with cash in your pocket. Okay, it is an awesome technique. And I tell you what, if you're not a student, I'll do this for you. If you're not already signed up, go to my website at thenotebyer.com. Okay, join my list. Okay, and we will send you that as a free report. Okay, it's an awesome technique. What you're going to do is you're going to create a note. You're going to help the homeowner, the seller, to create a note, and you're going to help them to sell a small part of the note, enough of the note that will give them a down payment, and you can build in a profit for yourself. It's pretty awesome. It's a great technique. Think about it. Couldn't you buy more properties for no money down, no money out of your pocket, if you could still give the homeowner cash at closing? I mean, I don't know about you, but usually when somebody's selling a property, they want some money, don't they? So that's an awesome technique. So if you're my student, go ahead, and you should already have the free report. If not, let me know. And if you're not a student, just join my list and we'll send you the free report on that. So Ben, your question was, how do I find an investor who would buy part of that note when there's no seasoning? So they don't know the payor's track record. And the payor is you, if you're buying the house. Well, I make it a no-brainer. I'm just selling, or I should say, I'm helping the homeowner to sell just a small part of the note, just enough to get them a down payment. So the loan to value is so low, it's like, it is a total no-brainer. It's very, very easy to find investors who will do that deal. And if you have trouble, call me, because I could definitely come up with people for you for that. Okay. How are we doing on time here? Okay, we'll get things wrapped up here in the next 10 minutes. I like to try to keep these to an hour or less if I can. Maria wants to know, is there a recommended order of study for the course I bought? There are videos and notebooks. What order do I do these in? Well, it depends on your learning style. What I've done is I realize that everybody learns differently. Some people are visual learners, some listen, some read, some like to take notes, some need to have a live presentation, and so I've tried to give you a variety of learning styles or teaching techniques so that you can learn based on what works best for you. If you are a reader, okay, and I'm a reader, I do very well with reading because I can fly through, I can make notes, I can put Post-its on, highlight, all of that. And so I would start with the Note Buyer's Master Guide. If you like to read, I like it because I can go at my own pace. If it's something I already know, I fly through that. If it's something I need to really study, I can get down and really, zero in on something. So that's what I do. That's what I would do. If you're a reader, I would start with the big, thick master guide. Keep in mind, it's about 400 pages, but there's a great table of contents. It's all index tabbed. So you don't have to read the entire book. You want to know how to get started, go to chapter 7, getting started. You want to know how to do your due diligence, flip to that section. You want to know how to work with investors, there's a whole chapter on it. And so you could really just focus on whatever it is that you need to learn at that time. And also, the master guide is all on audio as well. So what I would really recommend doing is I would take the audio, put it on your iPod or something, and when you're out and about in the car, I would listen. And then when you go home at night, you pull out the master guide, and you've already heard it now. So when you read it, you can, double check and make notes and all that kind of thing. That's how I personally would learn. But there are many people that prefer a classroom setting. And obviously, the best way for that is to come to the academy, which we'll talk about in a minute, because that's live teaching with me in front of the room. It's got live examples, role playing, all of those types of things. So what we have started to do is we now include one of the previous academies with the Note Buyer Master Guide system. So right now, if you would get the 2016 Academy, and that includes the video presentation, 4 days of video presentation. Okay. It includes the audio. So if you prefer, like I said, to put it on your iPod and listen while you're in your car, you can do that. And it includes the manual that I used. Now, some people get confused on this. I put together a completely separate manual for each academy, and each one is different. There's going to be some overlap and some similarities from year to year, but each year I make it better. And each year and this kind of goes into Ben's question, because he's asking, I've got the 2014 master guide, when do you update it? And is it okay to use that? Well, it's fine to use the 2014 master guide, but if you want the most up-to-date information, then you want the academy. You want to come, if you can, come to the live academy. But if not, go to the resources that we have for you that is included with the master guide, and watch and listen. And then that book, the manual for the academy, you can download that and stick it in a binder. Those are all my slides, so that you can actually see, right in front of you what I'm teaching from. Okay, so to simplify all of that, unless you are a reader, I would start with the Note Buyers Academy media set, because it is the most up to date, because it does have role playing in it. There's real examples, real deals that I've done, real deals that students have done. It's just, there's so much more that I can give you from in a live presentation than I can in trying to write something down. And so I think that you get a whole lot more out of the actual academy. And like I said, the ideal thing is to come to the live event. But if you can't make the live event, then by all means, go through the media set. So if you're a reader, start with the master guide. If you're not a reader, start with the media set. Okay, so let's switch over to Matthew. If you'll put the website on the screen for me. Here you'll see the Note Buyers Academy, and it's at my website at thenotebuyer.com. It's coming up September 27th through the 30th. And if you are serious about doing notes, you should really try to come. I mean, I know this probably sounds like I'm bragging, and I don't mean to brag, but it really seriously is the most comprehensive, thorough note buying event in the country. It's 4 days of me teaching. If you like the information that you got from this webinar, imagine 4 full days of me teaching. It is not a dog and pony show of people selling products, okay? It is live teaching by me. I will have 1, maybe 2 guest speakers. I like to have Alan Calgill come because he teaches private lending. And what we have discovered is that our materials really go hand in hand. The private lending fits so well with the note buying. So he will be there, okay? But for the most part, you're going to get me teaching for 4 days. It's an awesome time. If you go to the website, you can see here. Oh, let me mention this. So we have a riverboat theme where the event is held at the Radisson Inn, which is kind of an iconic hotel. It's so iconic. I will tell you this. I went to my prom dinner in the revolving restaurant at the top. Okay. But what we do, it's such a special event. We go to the, I provide all of your food for you. You have a continental breakfast, and then you get really nice buffets for lunch and dinner. Let me try to scroll down here and show you some pictures here. This is there's a classroom. I do try to keep them relatively small. Hey, you can go back and play some of the videos there, the testimonials. You can see there's lots of networking. I mean, when you come to the academy, yes, you are going to get so much information. You're going to be blown away, and in a good way. When you come out of that after 4 days, even if you've never bought a note, you're going to feel like a pro. But besides the teaching, you've got plenty of networking. You've got networking and fun. Look at here. Here we are having the dinner. You can see the meals. There's Alan Calgill. And then on Saturday night, we have a great time. I believe that all work and no play makes Donna a dull girl. So we built in some play on Saturday night. I take you at my expense on a riverboat cruise. And it's a dinner cruise, very nice dinner. We go up the river for about an hour and a half and then turn around and come back. So you can see the photos there. That's everybody on the cruise. And we just have a lot of fun with it. So the academy, the best way I could describe it is it's an experience. Okay. It's not just 4 days of sitting there listening to somebody talk. It is a complete experience. You get all the education that you need. It is for people, whether you're new in the business or whether you're experienced. I go from start to finish. I've got some very sophisticated stuff, and I've also got, I make it step by step. So if you're just starting out, and I will say this, it is so good that every year I get a large number of people that are repeat people. I've got people that come 4, 5, 6 times because it's not just about the learning. And you know what they say? There's so much information, I can't get it all at one time. And they keep coming back for more. Matthew, let's go to Sheena's testimonial. Sheena was at last year's event, and she's awesome. We just finished a deal, and she just had a new baby. Congratulations, Sheena, if you're on here. But listen to what Sheena has to say. Go ahead.
Hey there, my name is Sheena, and I am at the Note Buyers Academy 2017, and I am having a fantastic time. I am amazed at the amount of material that Donna is able to cover while we're here. She gives it a very broad overview, and she gets really, really detailed on the stuff that I want to know about. We seem to have a great variety of investors here, anywhere from inexperienced to experienced, and she's able to address the needs of everybody here. So we're all having a really great time. And one of the things that I found so fascinating on one of the days of the academy, after lunch, we started class a couple of minutes late because Donna was at the front of the room crunching out a deal on the phone. So she's actually buying and selling notes right now as she's teaching it. So that was really important to me. I wanted to attend a speaker who's actually doing the business, and Donna is. So I highly recommend Donna's materials and Donna's Note Buyers Academy. It's fabulous, and I'm having a great time.
Awesome.
Hey there, my name is Sheena, and I am at the
Awesome. She's a great gal. And like I said, we just closed a deal. It was funny because she was going into labor and we were trying to get the money to her so that we could close and wrap the deal up before she had the baby. And I think we did like the day before she went, something like that. It was very close, but we got it done. It was what an awesome way to end your deal, make some money and have a new little girl. So that was awesome. But I invite you to go back through and listen to everybody else's testimonials as well. And there's lots of information about the Academy right on the website. I do want to tell you that I'm going to do a flash sale this weekend. So be watching your email, because I'm going to give you a flash sale and give you some extra off of we're on our early bird special now. So you definitely want to sign up as soon as you can, because you don't want to miss that deal. I want to announce the winner of the negotiating course, Cynthia Knight. Congratulations, Cynthia. And you get the negotiating audio CDs. We always pick one winner out of our people that are on the webinar. And today that is you, Cynthia. So congratulations. I know you're going to enjoy them. They're great. They're great for everyday living. Negotiating with your kids, your spouse, and everything. So you'll love it. And there's lots of stuff pertaining to notes and real estate as well. So, okay, well, I hope you have enjoyed today. I want to go back over Matthew 2. I want to show them I want to show you that we have fun at the Academy. Let's go down to the bottom there. And it just so happens that they have they had a band on this top floor of the riverboat, and we had a great time. And I want you to see this is showing you that we're having a good time. Go ahead, let's end with this clip here. David is having a great time. See, we do have fun. It's all about learning, having fun, and just being happy, So I hope that you will be able to clear your schedule and come. It's an annual event. It's once a year. If you don't make it this year, you won't be able to come till next year. So do what you can. Come to the Academy. And I hope you've enjoyed today and got a lot out of it. Look forward to seeing you soon. Have a great weekend. God bless.